roles. We have some pretty cool setups when we start.
Sounds good to me.
I'm going to hit the start broadcast.
The broadcast is now starting. All attendees are in listen-only mode.
Hey, everybody. Jeff Gibby here over at Metastock. Hope you're doing well today. Thanks for coming. We have a very special event today. And let's go ahead and get to the legal disclaimer, get that rolling. So today's demonstration is designed to instruct you on using this Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So today we have, for the first time, Thomas Wood. Thomas Wood, I do want to tell you, is not an inexperienced presenter. We were just talking, he's given a couple thousand different presentations over the course of the years. We've been developing a program out with ValueCharts for a number of years now. It's finally come to fruit. He's going to talk to you a little bit about that. And in addition to that, some pretty cool patented technology that's only available, that's now available for Metastock. So let's go ahead and bring him on here. Tom, how are you today?
Hey, Jeff, doing pretty good.
All right, I'm sending you the screen. I can hear you.
Good deal.
I'm doing really well. You know what? We had the first sunny day that we've had in probably what feels like the last 6 months, but hasn't been that long.
No kidding.
It's been pretty dreary over here. Lots of rain. It feels like London, literally.
Yep, I agree. Same thing.
All right. Well,
can
you're
everybody see my
live.
screen? Good deal. All right.
We can see your
thank you
screen.
for having
It's
me
coming
on.
through. Yeah, I'm going to gather your way.
All righty. Well, we'll go ahead and dive in here. Thank you all for having me. Again, my name is Thomas Wood. I'm a partner here at Basecamp Trading, also the director of trading operations. And today we're going to be talking about trading with value and momentum and diving into the Metastock suite a little bit and talking about how the ValueCharts indicator and MQ momentum indicators work and how you use them with your trading. So with that being said, before we go into the good stuff, I always go over risk disclaimer. Just keep in mind, trading or investing carries a high level of risk and is not suitable for all persons. We always encourage traders, look, when you go to learn something new, there's going to be a learning curve. Don't expect to go buy an indicator or something and all of a sudden you're the richest man in the world. It doesn't work that way. But take the time, learn it simulated, practice it with fake money. Once you can make money with simulated money, then go live and go with that. We also always encourage people, look, always trade with risk capital only, meaning don't go take your kid's college fund and start trading with it. Not a good idea. Twofold reasons. First off, if you do lose it and you're trading with risk capital, it's no big deal. But if it's a college fund or something, then it puts a ton of stress on you. Second thing is because if you're only trading with risk capital, it takes a huge burden off your shoulders. And you're not always sitting there going, I have to be right. I can't lose money. I have to make money. All right. So with that being said as well, we're required to show you CFTC rule 4.41, just a hypothetical disclaimer saying, look, past performance results are not necessarily indicative of future results. And obviously, I can't show you examples from the future, but we've used this tool for tens of years here. It's patented. We use it every single day in the trading room in front of hundreds and thousands of traders. We've used it in hedge funds, trading real money in the past and currently. So with that being said, we practice what we preach. So for those of you that are not aware of who I am, this is me, Thomas Wood, and my beautiful wife, Dora. And one thing that always comes up is, Thomas, how are you so young? Or you're really, really young. How do you know so much? And I tell them, well, yeah, I'm pretty young, but I'm fortunate enough that I've been trading since I was about 13 or 14 years old. And I've had more time spent more time trading real money than most people will in a lifetime. And the other question that always comes up and everybody goes, well, why are you doing trading education, trading technology? If you're such a good trader, why aren't you just trading for yourself? And in order for you to understand that, you have to understand a little bit more about my background, what got me into trading, and why I do what I do. So first off, the only thing I've ever done in my professional career is trade for myself, trade for others, and help people learn how to trade and create trading technology like the ValueCharts suite that we're going to be talking about today. Secondly, the whole reason I got started trading is my father got me into it. And he said, look, Thomas, you don't want to be doing this backbreaking work that I'm doing every day. He owned a construction company. He said, one of the best ways to have the freedom to do the things you want to do, have the time to spend with the people you want to spend it with, is trading. That gives you freedom from money and time constraints and lets you be your own boss and everything. I said, okay. And he got me started when I was really young. Well, when he first started trying to learn how to trade, he went out there to guru after guru, started shopping around, and ended up losing hundreds of thousands of dollars. I thought, you know what? That's not right. And I wanted to be the exception to the rule and really help people and show people that, look, anyone can do this with proper discipline and proper trading strategy and the right tools and patience. All right, now with that being said, let me tell you a little bit more about Basecamp Trading, who we are, and about ValueCharts in general. So we at Basecamp, we have combined over 40 years experience in hedge funds and professional money management. Okay, we're a trading technology company with patented trading technology we'll be discussing today. It's been featured in Bloomberg, CNN Money, Barron's, Money Show, Traders Expo. We've been speakers around the world. We've worked with thousands of retail traders. I've worked with retail traders all the way up to funds managing billions of dollars doing consulting. All right, and I've helped traders go from consistently losing money to literally running their own funds. And that's one of my most proud achievements. Okay, so with that being said, our strategies work. This is a brokerage statement from one of our accounts, or from one of our funds we had in the past. It shows current month gains 4.8 million in gains, and year to date up 7.6 million. All right, and one of the big things that we used in that fund for the algorithms that we're trading is the ValueCharts indicator suite, which we're going to be talking about again today. So let me tell you here really quick, what separates professional traders from the 90%, right? What keeps that 90% of traders out there from making it? Why is it so hard? Well, first off, professional traders do a really good job of maximizing their profits, meaning they're in it and they catch the bigger move. How many of you look back at what trades you've done in the past and you say, you know what, I got in, I was up $100, I took my profit, I was really happy, but then I sat there and watched that thing go and I could have made $2,000 on that trade. Yeah. Happens all the time. So a professional trader does a really good job of maximizing their return when the market gives it to them. The second thing is confidence and approach. In order to be a long-term successful trader or professional trader, you need to have confidence in your strategy and in the system. If you do not have faith or confidence in the tools that you're using and the strategy that you're using, you're not going to have the discipline that you need to trade when you're supposed to trade and pass when you're supposed to pass. All right. And the last thing is consistency in gains. And it's not just consistency in making money all the time, because in order to be long-term profitable, you don't have to be right 90% of the time. You can be right 30% of the time, but have a 10-to-1 reward risk ratio. And that's a really good strategy to trade. But it's the consistency in the profitability and the discipline and in the returns versus the risk. You can't go out there and then all of a sudden risk $10,000 on one trade when on average you're only risking $200 on trade. And that's what so many traders end up doing that causes them to blow up. That's why you see people that will have been going really, really consistently profitable for a week or two or a month or two, and then all of a sudden they give back all of it and more in just one day. And you cannot do that as a professional trader. So what are we going to be talking about today? All right, because everybody's here for a reason. You want to learn something, right? So I always try to make sure I teach you something if you're taking time out of your day to spend with me. Okay, so we're going to talk about the three components of trading. What are the three components of technical analysis that we look at when we're going to place a trade in the market? We're going to talk about understanding the fundamentals of objective value. What do we mean when we say a market is overvalued or undervalued? We're going to talk about how to read value charts and the MQ momentum indicators. Sorry, it says R indicators. And we're also going to talk about intro to value range trading and a couple different strategies you can use with value. All right, so with that being said, keep in mind what we call the law of diminishing intent, or LODI. All right, and what this is we always start off with the best of intentions. This applies to more than just trading, but specifically we're going to talk about it in regards to trading. We always start off with the best intentions. You know what, I'm coming here, I learned something new. I learned how to use this tool. I think it's great. But the longer we put off making a change and actually taking an action on that feeling, the lower the probability and the less energy we're going to have to follow through. So today I'm going to teach you a lot of good stuff. I'm going to show you how all this works. And at the end, I'll show you how you can take the next step and you can get the value charts indicator suite for Metastock. But I would encourage you to not put it off. If you decide you're going to do it, dive in. Don't keep pushing it off, because the longer you do, the lower the probability of following through with it. Okay. Now, for those of you that go, this looks great, I want it, great, I'll show you how you can do it. For those of you who say, you know what, it's not really for me, no big deal whatsoever. Hopefully you learned something by being in the webinar with me today. Okay, so with that being said, let's dive in. What are the three components of trading? And before we get into that, before we dive into the three components of technical analysis and what we look at before placing a trade, I have a question for you. What's the first feeling you get when you are about to trade? What's the first thing that pops into your mind when you're about to trade? Many times traders tell me it's anxiety, or it's uncertainty, or it's hesitation because they're not sure. Now, why do they have that? Why do they have that anxiety, uncertainty, and hesitation? Well, a lot of times it's because they've experienced loss or pain of loss because they've never had that consistency in their trading. They've never had that consistent profits. They've never experienced the success and what comes with it, or the disappointment because they feel like they're letting themselves or their family down. Or one of the big ones is fear. A lot of traders are afraid to get into the market because they do not have a set of rules, a rules-based approach that they know is proven that they can follow. And if you're feeling all these, it makes it that much harder for you as a trader to become long-term profitable. So what are the three components of placing a trade of technical analysis that we want to look at before we get into the market? Well, they are price, momentum, and value. Now we look at price, a lot of times we'll do things like technical analysis, looking at price charts, candlestick patterns. They help us understand trend. They help us understand where the market's moving as a whole, whether we're in a trending environment or a compressing environment. We look at things like momentum using tools like an oscillator, like an RSI or the MQ momentum indicator that I'll be talking to you about today, or an MACD. And then one thing that's always been missing is value. And when I say value, I mean objective value, not subjective value. So we want a approach that is not, in my opinion, it's undervalued. It's based on how the market has typically moved. It's undervalued or it's overvalued. We want that to be proven. So once we have all three of the components of technical analysis, then we can place a trade. We can make a well-informed decision on whether or not it's a good opportunity. So let me tell you a little bit more about value charts and what they are, what we use them for, what they look like. Okay, so value charts place price or plot price in one of 5 value zones. Okay, pretty simple to understand. Fair value, moderately over and moderately undervalued, and then significantly over and undervalued. And that looks something like this. All right. Now, historically speaking, you can think of this kind of like a bell curve here. All right, where the market rarely trades there, and then we trade a lot of times in fair value, and then it rarely trades undervalued. All right. Now, historically speaking, and again, we've gone back and in order to get it patented and everything, in order to prove the science behind it, we had PhD statisticians go through and analyze this and break this down over 30 plus years of data. Okay, and they all came to the same conclusion that it is significant in determining over and undervalued prices. But historically speaking, we trade in fair value about 68% of the time. Okay, and then we trade moderately over and undervalued about 14% of the time. And we trade significantly over and undervalued only about 2% of the time. Okay, so it's about 14% here and 14% here. And then only about 2% of the time we trade significantly over and undervalued before pulling back and going into either moderately over undervalued or fair value. So when we see these markets that get extremely extended, we know the odds are no longer in our favor that it's going to continue to run and that we should expect at least a retracement or a consolidation. Now, it does not mean that every time we hit significantly over and undervalued that the market has to reverse. That's not the case. It's just overvalued based on or undervalued based on current or recent price action. The other thing to remember is that value is time dependent. So while we might look at this and say, okay, we're significantly overvalued on a daily, we might be undervalued on a monthly, or we might be undervalued on a 30-minute, but overvalued on a 2-minute. So keep that in mind. When we're looking at and referencing value, it's time dependent. Now, what does this look like on Metastock? Well, this is what the value charts indicator looks like. It'll be at the bottom of your screen, and it's an oscillator. And you can see significantly overvalued prices are showing up there in the upper red section. Significantly undervalued are showing up in the lower red section. Fair value is the center green area, and then moderately over and undervalued are above and below that in the yellow area. Now, again, we went and we had this vetted by 3 different PhDs. Dr. Abraham Weiner from University of Pennsylvania, Wharton School of Business, Dr. Eric Laber from University of Michigan, and Dr. Sheila Nair from UCLA. Okay, and all of them were in agreement that value charts is highly effective in determining valuation in dramatically changing market environments. Now, one of the things that separates value charts from something like Bollinger Bands or any other overbought, oversold indicator, aside from the fact that it's patented and nobody else has the algorithm, is that they have dynamic volatility units that adjust based on changing market volatility and changing market environments. So it will automatically adjust based on the current market volatility in the current market environment. Okay. So what does it look like again on Metastock? This is how we'll see it. It'll show up down here. You'll have the chart down at the bottom showing you the value chart, and this is your price chart up top. So this is price up here. And this is your value chart down here. Then it's also plotting these dots above and below to show us how far into over and undervalued it is on the chart itself. So you don't even have to reference the value chart. But you can see here, we start getting significantly overvalued at the very top end of this bar, and we pull back a little bit going to consolidation, and at the very top end of this bar, we pull back and start to reverse. We get significantly undervalued here. We start to pull back again, pull back into fair value, kind of reset itself, then gets really extended once more, significantly undervalued. Down there, we start to pull back up. And then this is what we want to see for a slow, steady trend. This is where a market is just steadily, it's pushing overvalued, which is good. It's telling us, hey, it's getting extended, which we expect to see in a trending market. But then what we want to avoid is when we snap out of it and spike way up overvalued like this, because that tells us, okay, time for it to consolidate before continuing. Now, once again, I want to make sure I really hammer this home. Just because you see significantly over or undervalued does not mean the market has to reverse. Okay, we expect to see overvalued prices in an uptrending market. That's a good thing. It tells us that it has strength behind the move. We expect to see undervalued prices in a downtrending market. That's a good thing. All right, so when do we trade just blindly based on value, where we go, okay, significantly overvalued, sell, significantly undervalued, buy? When we are in the correct market environment. So that environment is what we call a value range trading environment. And so it's in a sideways market instead of a trending market. And I'll talk about how we do that in just a minute. However, if we're in a trending environment and the market is running, what do you think we're going to try to do? So let's say we're in an uptrending market. We want to be buying that market, right? So we want to have the highest odds of having that market move in our favor, right? That means if we're looking to buy in an uptrending market, we want to wait until it pulls down undervalued, and then we look to time our entries. All right. Now, let me tell you why this is so important and why value is such an important component of technical analysis. There's a hedge fund we worked with, and they had a strategy, just one of their strategies, that was losing money every single month, month in, month out, $60,000 a month on average loss. Okay. Doesn't sound like much, but that's just one strategy within the context of 15 or 20 different strategies. All right. So they're losing $60,000 a month on average with that system. We said, okay, what we're going to do is we're going to add this third component of technical analysis. We're going to add value to it. So we're going to make sure we're no longer buying from significantly overvalued. We're going to look to buy at undervalued prices. We're going to look to sell from overvalued instead of selling from undervalued. All right. And that system turned on a dime and went from losing an average of $60,000 a month to averaging $30,000 a month in profit, just by adding the one value component. This is why you always want to have all 3 components of technical analysis before placing a trade. So let's take a look at a trending environment. This is Amazon. We can all agree Amazon's been in a pretty darn good uptrend here recently, right? Until past year or so. But what's happened? So if we're trending, when do we want to be buying? We want to be buying when we go undervalued. So right there, or right here, or right here, So this is helping us time our entries. And what happens to so many traders is they end up doing what we call trading the wrong side of the mountain. So if we see a market that's climbing like this, they see it start pulling back and they go, oh, it's pulling back, I'm going to jump in. And they'll go long right there, only to get stopped out right here. Well, by waiting until we see undervalued prices, we know we have a very high probability the odds are now in our favor that it should start to turn back up again, right? So instead of buying over there, we're looking at buying right around here or right around here to get long, and then have that market follow through almost right away. Now, Harold, you're asking, does this apply to day trading and minute charts? Absolutely, 100%. Remember that value is time dependent. So it applies to any time frame. It's just when we're looking at short-term charts, you're going to be short-term over and undervalued. So if you're trading intraday, you're looking at an intraday trend, you'll look for overvalued bounces. For example, in the indices we're selling off, you look for overvalued bounces to go short. Or if it's trending higher, you'll look for undervalued bounces to go long. Okay, but you can see we continue to go up, undervalued dip there, undervalued dip here. You can see it on value charts there. And every time we pop up significantly overvalued, remember, it doesn't mean that the market trend is coming to an end. It just means, hey, we've gotten extended. So what do we start to do when we get significantly overvalued like that? Maybe we take off partial profit. Significantly overvalued, maybe we take off partial profit. Okay, and then again, we look for more undervalued dips, undervalued retracements for buying. All righty. So this is what we call value retracement, trading a value retracement, looking for an undervalued dip in an uptrending market or looking for an overvalued dip in a downtrending market. So let's move on here. Let's talk about, remember I was telling you, there is a time when we're trading that we can trade just significantly overvalued and significantly undervalued. So we can look to sell the tops and buy the bottoms. And this is what we call value range trading. Now, when do we want to do this? Typically, we're looking to do value range trading once we hit a sideways consolidating market. Okay, so that's the very first thing you want to look for. Now, value range trading is a great strategy to implement when you find a market that's in compression. So in order to understand when a market's in compression or in a trending environment, you need to understand the three phases of the market. The market is always either A, trending up, B, trending down, or C, consolidation/reversal. So what's the definition of an uptrend? This is based on price. Remember we talk about price, momentum, and value. So the definition of an uptrend is going to look something like this. Higher highs and higher low, pivot points. So we'll see the turning points. Each low should be higher than the last low, and every time we rally, we should hit a new high compared to the last pivot high. As long as we continue to put in higher highs and higher lows, we stay in an uptrend. Now, a downtrend is defined as the exact opposite. It'll look like a staircase going down. We'll be just trending lower highs, lower lows, like this. And each low will be lower than the last pivot low, and each high will be lower than the last pivot high. So if we go back up, for example, and we look at Amazon here, let's look at our trend. We're going high, low, high, low, high, low, high, low. So what's this trend? This is an uptrend. Fairly simple. And then we change and we go into downtrend, and now we're changing here, going back into an uptrend. Okay, so that's the definition of a trend. Those are the first two stages of the market. And the third stage of the market, remember, was consolidation/reversal. So everything else, if it does not fall into the trending up or trending down category, it then is considered consolidation/reversal. And that'll look something like this, where we have higher highs and lower lows, or we have lower highs and higher lows. So you have a narrowing range or an expanding range, but it's not trending. Okay, so when we see something like that happening, that then tells us that we can go and look to start implementing value range trading. So essentially, when we are trading value ranges, all we're trying to do is we're looking to profit from market fluctuations between overvalued and undervalued. Okay, so we're looking for that sideways choppy market, and we're using value charts to identify when we get extended one way or the other to implement a trade. Okay, So you want to be careful though, if you're attempting to trade a value range trading strategy in the incorrect market condition. You must be in a trading range or in a consolidation based on price action. Then we can look to implement it. If it is trending, value range trading is not going to work as well without implementing some sort of directional bias. Meaning if we're trending up, we want to be looking to buy undervalued only instead of sell overvalued. And if we're trending down, we're going to be looking to sell overvalued only, not buy undervalued. Make sense? Pretty simple concept, but this is what it would look like on a price chart. Now, again, we have the MQ momentum on here, and I'm going to explain what that is and how we use it here in just a minute. But here's Tesla, and we can pretty much tell Tesla's been sideways choppy here for quite a while, right? So what do? When we hit significantly over and undervalued, we start looking to buy these significantly undervalued dips, like buying there and buying here and selling here and here and selling over here. Now, if we are trading significantly over and undervalued, how do we want to do this? Because we don't want to just blindly jump in there when this thing gaps up and goes significantly overvalued here. We don't want to just blindly jump in. What do we want to look for? Well, we're going to watch and wait for it to break the previous price bar's low. And when that happens, then we place our stop above the high. So we would have been selling here, stop here. And this first one, it absolutely would have stopped you out. I'm not going to sit here and lie to you and tell you that every single time you hit significantly over and undervalued, you're going to make money. It does not work that way. There's no such strategy out there. Okay. However, what I can tell you is if we start trading this, and then here's our stop, that balance between reward risk and percent win, and we come down, we hit significantly undervalued here. So we're looking at taking profits down here. Our profits should be much larger than our average loss. So with this, when we have both value charts and price action in our favor, we end up with a very positive reward risk and percent win balance, which is what we're after. And again, you could have a strategy that wins 60% of the time that has a 1.5 to 1 reward risk ratio. So your average win is 1.5 times larger than your average loss. That's a great trade. Or you could have a strategy where you have a 30% win rate with a 5 or 6 to 1 reward risk. And that's a great strategy to trade. Okay. But again, the thing about value range trading is you want to implement it in the correct market environment. All right, here's another example. This is Alphabet or Google. You can see when we're moving sideways here, when we're in this sideways compression pattern like this, we're looking to sell significantly overvalued and buy significantly undervalued. So we're buying down here, selling over here, buying down here, selling over here. Okay, making sense? Once we get back into a trending environment, we're going to higher highs and higher lows, right? So the environment changes. We went compression here, and we break, and we go high, low, higher low. So now what are we looking to do? Buy undervalued only, buy undervalued only. We're no longer looking to take shorts. Then we go back into compression up here, right? Only briefly, and the trend starts to change. We go lower highs, lower lows. So what are we looking to do there? Sell overvalued. Sell overvalued. Come down here, you can see overvalued bounces, sell overvalued, sell overvalued. Making sense? And once again, what we're doing is we're combining price action with momentum and value. Now, we've taken it one step further for Metastock specifically, and this is the only platform that we've done this on. We've set up the value charts indicator to have what we call expert commentary on current market developments. Okay, you can turn this on or off with your Metastock platform if you want it or don't want it. But this tool is a great way to help you with analyzing current market happenings and help you identify potential trade setups and market biases. Okay, so this is what expert commentary looks like. And keep in mind, it's been built in to provide us a few different things, but it gives us current bar information, it gives us current value charts analysis, it gives us intra-bar extremes, the value charts value at the close of the price bar, and it also gives us considerations based on value charts. Do we want to be buying here? Do we want to be selling here? Do we want to be holding? Okay, so it tells us a lot of information and breaks down a lot of information on how we can interpret that price action, how we can interpret the current value level of that market. Okay. He says, so easy on the eyes. Yep. Makes it very simple to see. Now this works, again, keep in mind that value is time dependent. So we can apply this to any market or time frame we want. And when I say that, just remember, short term, you might be undervalued, and long term, you're overvalued. Trade the time frame in front of you based on the analysis you're doing on that time frame. So one mistake I see a lot of traders make is they go out there and they say, okay, I want to buy this market, and they're looking at daily, and the daily is significantly overvalued. So they go, okay, I can't buy it because it's significantly overvalued on daily. Now remember, their time frame that they're analyzing and their time frame for their trade idea is a daily. So long term, they think it's going higher, but long term, it's significantly overvalued. So they can't place a trade. So what do? They go, I'm going to go find a time frame that's undervalued so I can buy it and justify this trade. And that is the wrong way to go about technical analysis. It's the wrong way to go about trading, because you will always be able to find some time frame on somehow that matches your idea. And all you're doing is you're then just trading based off of your idea as opposed to what the charts are actually telling you. Okay. So remember, if we're looking to go long on a daily basis and dailies are significantly overvalued, don't go pull up a 5-minute price chart and say, haha, now we're undervalued, because you're starting to pull back intraday and try to place your daily long, because you're just defeating the purpose. All right. So trade the time frame that's in front of you, do the analysis from the time frame that's in front of you. Don't go searching to justify an opinion, because then what you have is you have subjective value, which defeats the whole purpose of using objective value. All righty. So let's move on. Let's talk about the third component of price. So far, we've discussed using price action to determine a trend, or to determine market environment, whether we are trending up, trending down, or consolidating / reversing. Then we talked about value and how we use the value charts indicator suite, and how we can take value charts and use them to determine potential long and short entries based on appropriate value levels and value zones. Now we're going to add that third component, which is momentum. And how can we trade with both momentum and value? Now, one of the tools that comes with the value charts indicators on Metastock specifically is the MQ momentum, which is one of my favorite momentum oscillators out there. All right, it's similar to an MACD, but the algorithms are different, and it's much more reactive. It adjusts to price action and to price movement much faster than MACD will. All right, so in addition, you'll also get access to MQ momentum indicator when you sign up for the value charts add-on. The MQ momentum is an oscillator that's used to determine market strength. Now, there's a couple different pieces to it that we look at. All right, but one way of using the MQ momentum is to identify bullish and bearish divergences. So when I say it tells us market strength, this is what the MQ momentum looks like. And let me break down what you're looking at here. So there's 3 different main components to the MQ momentum indicator that you're paying attention to. There is a fast line, which is this solid white line. I know it might be kind of hard to see here. There's that fast line, which is a solid white line. And then there's a slow line, which is the dotted white line here. Okay. What the fast and slow lines are telling us, they kind of move together as one. And what they're telling us is the trend of the momentum. So just like when we look at price and we're saying an uptrend in price is higher highs, higher lows, and a downtrend in price is lower highs, lower lows. When we look at MQ momentum and we see price, or we see momentum going like this, higher highs, higher lows, that's an uptrend. When we see it roll over and break to a lower low here, and the indicator lines start going lower highs, lower lows, that's a downtrend. Then it turns and starts going higher lows, higher highs again, all the way back up. That's an uptrend. Okay, so this is telling us the trend of the momentum, the overall trend of the strength. Now, moving on from there, the next part that we have are the histograms. And the histograms are kind of telling us the force behind a move. All right, so when we see really big red histograms, that means the down move that's taking place has a lot of strength behind it. Okay, we have a lot of force coming in behind that. When we see very small histograms like this, there's not a lot of force behind it. So the way I typically explain this to people would be like this little red histogram here is like somebody coming up and pushing you. These histograms here would be like getting hit by a freight train. Okay, there's a lot more force behind this one than there is behind that one. And the exact opposite goes to the upside. So a lot of strength there, a lot of strength here, very little upside strength when you're looking back at this one here and this one here. All righty. So those are the three main components. Then one question I always get is, Thomas, what are those blue lines top and bottom there? It's a plus and minus 25, I believe, or plus minus 30. That's just telling us, hey, momentum's gotten really extended one way or the other. So we're getting really extended when it's been down here. It's another thing telling us, hey, this overall move has gotten maybe getting close to being played out. So how does that work? How do we reference that or interpret that? If you think about it this way, if this is time here, and this is the probabilities of a move continuing, when we first start, or when a trend first starts, or move first starts, we have pretty good probability of it continuing our direction, right? And then as it comes to maturity, the probabilities of it actually continuing increase, right? But then at some point in time, eventually you will start seeing the probabilities of continuation steadily decline. And this applies especially for those of you that are doing trend following. The longer a trend's been intact, the lower the probabilities of that trend continuing to run your direction, right? So this is kind of how you interpret that. So when we see that momentum's gotten really, really extended, that means we're probably down in this area here, and the probabilities of continuing are lower and lower and lower. Okay, so let's see what it looks like on a price chart. Now this is Apple up here on the price chart, and down at the bottom we have the MQ momentum indicator. So one of the things I told you before was we can look at the trend, momentum trend, and then we can look at other things called divergences. So let me explain what those are. So here, remember, we look at our indicator lines. We see our indicator lines are just staying lower highs, lower lows, all the way down to here, right? And what's happening with the price? Price is staying lower highs, lower lows as well, confirming that trend. So now we have momentum confirming the downtrend, as well as price action confirming the downtrend. And we'll be looking to sell these overvalued bounces that will occur. All right. Now I'll add value back in here in just a minute. But what do we see happen down near the bottom? This is where we start seeing a divergence occur. Now, a divergence, all that's telling us is that price action and momentum are no longer in agreement. So we see price continuing to go lower highs and lower lows, right? But what do our indicator lines start doing? See that? How our momentum indicator line has actually changed and diverged from the price. And what is our histogram telling us here? Now, most people would look at something like this big gap down. They'll go, oh my gosh, the floor is falling out of it. Apple is going to go down to the ground. Okay, it's dying. It's never coming back. However, when you look at the momentum, you actually see that this does not have nearly as much strength as the previous down moves have had. Okay, so what ends up happening here? We have a bullish divergence with price and momentum, and then we see price bounce and start to climb. And then what happens? Our momentum trend continues to stay higher highs, higher lows, all the way up. And what's price continue to do? Higher highs, higher lows. You guys seen why it's so important to have this third component? We don't want to just look at price and value. We want to look at price, momentum, and value, right? Now, what are we seeing occur now in Apple? Well, the downswings are starting to pick up a little bit more strength, right? So we're saying, okay, caution, trend is not over. We don't have a really well-defined divergence or anything yet, but caution. Downswings are picking up strength, upswings are losing a little bit of strength. Because we were way up here, now we're down here in this rally. Okay, so this is what we call that bottom piece here, where price momentum diverge like this. This is a bullish divergence, and we want to see both histograms and indicator lines shift like that. All right, so let's take a look at another example. This is Google. And remember, we were talking about this, and we were talking about how this thing started trending higher. And this is why divergences are so useful, because we'll see something like this happening where we go there, and look what also happens on value charts. The high here, we have a divergence on value charts as well. Then what happens? Price comes down, breaks to a lower low, and we start selling off. So we can see, hey, we had a ton of momentum behind this rally here, but then that momentum dies off and the market starts to reverse. Now we go over and look at current prices. What's happening in current prices? We had a lot of strength on this rally here, right? What about this one? Not a lot of strength on this one. Now, one thing I want you to keep in mind as well with momentum and divergences in general, just because you have a divergence, it does not mean that the market is going to have a full-blown trend reversal. Many times you will see a divergence occur and the market will just go into consolidation. So how do we know when a trend reversal occurs? Just keep in mind the general rule of thumb, trend is always based on price action. Higher highs, higher lows, or lower highs, lower lows. So a divergence will often precede a trend reversal, but the price has to confirm it. All right. So let's move on a little bit more here. We've also added a couple of really cool features to the Metastock version, once again, that's unique totally to Metastock. And what we've done is we've actually combined a couple different signals from MQMentum and ValueCharts tools to identify potential entries. Okay. So what we start doing is we start looking for a combination between price action and momentum together to identify when a potential top or bottoming is going to occur or when a reversal should occur. And we actually have this set up to call them out to you and plot them on the chart and give you buy and sell signals that are generated when markets hit extended values but have opposing momentum signals. So it's like saying, okay, this market's really extended to the upside, but our momentum is down. Okay, and we have also different commentary on here that'll tell you, hey, this market's neutral, or this market's bullish, or this market is bearish. All right, so here's what it looks like on here. This is IBM. You can see where it says VC buy right here. That's a bullish buy signal. We rally right up from there. Then we have VC sell here, bearish sell signal. You can see our momentum dies off there with that bearish divergence. Value chart, same thing, bearish divergence. What happens? We come right back down. We have VC buy, right back up. Then we start seeing something like this, neutral bearish pressure. So, hey, be careful. It's getting extended. Right down here, we start seeing neutral bullish pressure. What starts happening, that means we've gotten really, really extended down here. So careful, start watching for it to pull back up. Same thing over here. And then we get a buy signal over here, buy, rallying right back up. So you can see we have more commentary than just buy and sell. We have, hey, there's pressure shifting. The environment is changing. Hey, the environment is changing. We also have straight up buy and sell signals that are generated. The other thing you'll notice now that's new on here is at the bottom, we have the ValueCharts ribbon, which tells us, hey, we have bearish bias all through here. We have bullish bias all through here. Now look at where that corresponds to the price. Sorry, trying to draw a straight line there. So we have a very bearish bias there, which means we're not trying to buy that market. We're over here. We have a very bullish bias. Means we're not trying to sell that market. Just by using that ribbon, that'll help you drastically keep yourself from trading the wrong side of the market. Okay? Keep you from selling markets that are rallying through the roof or buying markets that are selling off through the floor. Glad you're enjoying it, Brett. Here's another example. This is that Tesla chart once again. And here we're showing, you can see VC buy signals and popping right up for a few days. VC sell signal, selling off, sell signal, selling off. We can see bullish buying pressure coming back in, neutral bullish signals popping up, and we see bullish change on the price on the value chart ribbon down there. Once we started to accelerate here, giving you buy signals all the way up in there saying, hey, don't be selling this, don't be selling this. But once again, helping you stay on the right side of the market. And once more, when we start looking at this, we can start bringing in things like the momentum trend. Well, we had a bullish momentum trend from this point all the way over to this point. So that means we're not selling. We're only buying undervalued dips here. Undervalued dip, undervalued dip. Then what happens? Right here, we have almost equally high prices, right? But look at this drastic difference in our momentum, both indicator lines and histograms. Bearish divergence, what then occurs from there? Straight through the floor. Okay, so these are some of the things that are really cool specifically about Metastock, that we literally do not have any of this on other platforms. So my question for you, can you see how the value charts indicator suite and MQ momentum, when you're combining price action, momentum, and value together, they can help to maximize your profitability. It can help to potentially increase your consistency and then grow your confidence because you know you're using tools that have been thoroughly vetted over years and years and years of data. Okay, let me show you some examples here. These are people I've done work with, I've done mentorships with, and these are the results that they're getting. Okay, this is the equity curve for those of you that are wondering. You can see he started off kind of slow, but then he started growing his confidence, getting more confident in what he was doing, and just through the roof we went. Here's another one. This is Lori and Frederick's equity curve. Remember I was telling you there was one trader that I worked with that went from consistently losing money to running their own hedge fund. That's this chart, this equity curve right here, and hers is better than mine, to be honest with you. It's you can't really beat it. This is Frederick's equity curve. This is Tom Trim. Tom's another great guy. He's done really, really well. Been trading very, very consistently. This is one of my favorites. This is Bill Wolf. And one of the reasons I like showing Bill's, I know it's older here, but he started off with a $1,700 account. Here's a statement. He went from $1,700 and it was in a matter of, what was this? From 1 month and a half, he went from 1,700 to 12,642. Okay. Yeah. Harold, you can put just a buy and sell signals on your chart. Pretty short. And this is another one of my favorites. This is Dave Glissmeyer. He actually used to work with us, but he came in, he was a consistently losing trader. And by the time before he passed away, he had gotten to the point where he was trading for a living. That's what he was doing for his job. And he was averaging over $3,000 a week in profits. And he has one of the best equity curves I've ever seen. Beautiful. Okay. So how many of you are ready to learn more? This, again, I told you I would show you how you can get it for those of you that want the ValueCharts add-on. And tonight only, we're going to be doing a special. Everybody that orders it tonight will also get a bonus training. It's a workshop that's about 3 hours that is specifically on different strategies and setups using ValueCharts. It's what we call a value trading boot camp. It's a lot of different strategies and tools, stop management, order entries, how we trade, how we follow and trail stops, etc., using ValueCharts. So everybody that orders tonight will also get that bonus workshop. All you have to do is either call Metastock at 801-506-0999, or you can go to metastock.com/sales chat, and they are more than happy to help you get it all set up there. The other thing is, let me answer a couple of questions I know are going to come through. Okay, but what if it's bad timing and I don't have the money right now? Well, one thing I'll tell you is it's never going to be the quote unquote right time, but you have to push yourself past your own rationalizations and make the commitment to change. You know what? When is it going to be the right time? It never will be perfect. Stop rationalizing why you can't do something and start making reasons why you can. The other thing is, I'm not sure this will work for me. I need to talk to my spouse. I'm not sure this is going to work for you. You're 100% right. If you're not coachable, you're not willing to make a change, you're not willing to commit and dive into this and learn how to do it, then it's never going to work for you. But we have helped thousands of traders around the world. The ones that commit and put in the effort, it does work for them. And the last one is, I need to talk to my spouse. And this is one I like talking about a lot because it's something I use all the time. It's one of the number one excuses I use not to justify not doing things. But many times the underlying fear is really just a fear of commitment. And what if I give it my all and then I fail? So don't use your spouse as a crutch. If trading success can really make a difference in your life and the amount of time you get to spend with them, then I guarantee you they would support you. So don't be that person that just sits on the fence and never actually makes a decision to commit to doing something. Again, it's only $9.97 tonight. Normal price is $14.95. And as a bonus, again, for everybody that orders it tonight, you're going to get the ValueCharts Trading Bootcamp for free as well as a bonus. Again, metastock.com/sales chat. And the phone number is 801-506-0999. And also you can call 800-882-3040. So let me actually add this up here. The other number is 800-882-3040. And again, we have people standing by right now to help you with placing your order. All right. So another question you had, can you turn off all the extra signals? Yes, you can. You can also turn on and off the expert commentary. If you only want to show it when it has a buy or sell signal, yes, you can turn that on as well, where it's just buy and sell signals. I want to thank Jeff for having me out here. Thank Metastock for letting me come in and explain this to you, show it to you. I look forward to hearing more success stories about how traders have done using this. Hopefully you're the next one. Again, if you need more help, you can always email us, support@metastock.com as well. But Jeff, my friend, I'm going to give it over to you, buddy, and you're good to go.
Hey, great job. Very, very good presentation for your first time. I appreciate, well, your first time here anyway. Thank you for showing that. I wanted to kind of show a little bit of my own personal experience in Metastock with the value charts. I hope that's okay. I'm going to assume it's okay. All right, let's go ahead. And because there's just a few things, obviously me, I've actually been lobbying the Drew and the ValueCharts management to kind of put this into Metastock for quite some time. It's actually something that I've seen at several trade shows, and I really like kind of the patented techniques that you've used and the way you've kind of made it all simple. But there's a few things that I just kind of wanted to touch on looking at a live chart. So I'm gonna go ahead and show my screen. Let's hope it's the correct screen when it comes through. And I just want to kind of give you an idea of kind of the way that Metastock looks like on a chart. And if you've seen me kind of talk a little bit about charts, I usually like to show an example on the Dow and that kind of stuff. So I'm just going to break down a couple of the elements that kind of show up here on the chart. Right here, basically, as we were showing to you earlier, you've got the overbought, oversold areas, significantly overbought and oversold. Automatically, you're going to have the momentum indicators. Automatically, you're going to have these natural bearish pressures. And one of the things that really struck me is really how clean these signals actually look on a chart. The VC buys and the VC sells don't actually show up that often, but here on the Dow chart, if you look at kind of the first signal on the chart right here on the VC sell, that's kind of their main value chart sell is what that stands for, happened right here. You had kind of a bit of a fluctuation, and of course it's important for you to understand how the indicators work, but you didn't actually get a buy signal and a change in direction and trend until right here. And look at the rise that we've had up. Now, all the trades don't work out. We did have a sell signal right here. It pulled back a bit. You probably would have stopped out when you started to see these undervalued dots that actually appear automatically on the chart. And right now, we have a little bit of neutral bullish pressure, kind of seeing how the market's going to shake out from here. He did mention the value charts and kind of how it has a commentary. If you're not familiar with Metastock, that's okay. It's kind of a bit my job to show it to you. But I love the commentary. It's one of my favorite features in Metastock, so to speak. And when you have your commentary window open, you'll have a little bit of a triangle on the bar, and it's going to give you that current analysis. So right now we can see that our intro bar extreme is overvalued. Your at bar close is fairly valued. You can see your bar analysis, your other things to consider. It really breaks that thing down. One of the things that I like to do as I'm learning a new system is I like to go back in time and say, okay, well, what was it doing back here where we had that VC buy? So I'm just going to go click here, and this commentary that's over on the side will actually update to that bar. You've noticed I've moved this triangle over, and it's just giving us all of those condition and highlights on that current bar. Other thing that I want to talk about is pretty unique to Metastock as well, and that's the ability to do scanning. Like if you're an option trader, I like to trade options. One of the things that's a bit of a challenge is to be able to go in and find out of the 6,000 stocks that exist in the marketplace. What I want to be able to focus on is not looking at 6,000 charts every night. I want to be able to go in and focus on the optionable stocks that actually have an opportunity, and not necessarily just an opportunity, a really good opportunity. So if in Metastock we have the concept of this power console, which conveniently enough opened on a different screen. But let me drag it over here so you can see it. And right here, we've got the charts. This is how you open up a chart in Metastock. If I go to the scanning, we call it explore for an exploration. Somebody asked me the other day why we call it exploration. And I thought about it for a minute. I'm like, I don't really know why we call it exploration. The best answer I could give him was that maybe the founder of the company, Steve Akalis, really liked Indiana Jones. But I can come in here to the explorations and I can scroll down here. And you've got these 4 different value charts explorations that are built into them. And I can look for stuff that's significantly undervalued or significantly overvalued or extremely overvalued or extremely undervalued. I'm not going to run the scan because it doesn't take that long, but I've already ran it today, and I'll just kind of show you. It took maybe a minute or two to run, but I'll show you kind of what it's really just going to give us a list of the stocks that are either at extreme levels of overbought or oversold, or I should say overvalued or undervalued, depending on the scan that you run. It's a really, because one of the things you want to be able to do as a trader is you want to be able to focus on those stocks that actually have an opportunity. And so the scanning and the ability to combine this with scanning actually kind of makes it so much easier to kind of sift through the noise. And if you're an option trader, or if you're even a stock trader, there's a lot of noise in the market. What we want to be able to do is, without looking at 6,000 charts every day, just find those ones that are kind of in that area that give us a really, good opportunity. So that's really kind of what I wanted to add. I am really proud of the job that the ValueCharts team has actually done on this. And so just to kind of reiterate what the offer is today, if I can get it back in here. So one of the questions was, is this a one-time cost? It is a one-time cost. So it's the ValueCharts complete suite. It's going to include all of these symbols, all the indicators. There's nothing to buy separate with that. It's even going to, if you buy it today, it's going to include that course. That's actually going to take you step by step through it. So it includes the momentum and the ValueCharts indicator. It includes the scans that I briefly showed you for finding stuff that's extremely overvalued or significantly overvalued or extremely undervalued or significantly undervalued. And it's also going to include the expert advisor that kind of helps you explain and understand what's going on the chart based on the day that you're looking at. Normally, we're going to retail this at $14.97. We do have the webinar special where if you buy it today, you're going to get $9.97 on that. And that's also, you notice that I didn't include the value charts. They actually just told me they were going to include the entire boot camp. I would recommend you take advantage of this because it's worth it for the course alone. I absolutely love what they've done with the patented technology, the way they display it, the way they simplify it, the way they make it understandable. And the bottom line is, I love the way that it shows on a chart. And it's $997, but I think price is the least important aspect here. Really, this product, from the experience that we've had with it being live through all the testing and stuff like that, it's a product that you're going to have to try pretty hard to lose money with. So I'd encourage you to give it a shot. You can give us a call at 800-882-3040, or you can visit us at metastock.com/saleschat. So that's pretty much what I wanted to. Tom did a great job. I wanted to mostly show that you could also scan with it. We do have a few extra, well, actually, I don't see a lot of extra questions coming in. Tom, do you have any final thoughts? Maybe he doesn't. All right. In any case, I want to say thank you for coming and spending an hour with us. I hope that was helpful for you. I would encourage you to try this out. It's the product of many years of work by them and research by them. And for the first time, this is all available in Metastock. So I want to thank you guys for coming in. If there's anything we can do to help, let us know. Give us a call. We'll be happy to help you get this set up. And I'll see you at the next event.